In this video, we're going to talk about how MissPassiveIncome.com generates returns, strategy, model, and risks explained. Quick answer. Returns on MissPassiveIncome.com's featured asset classes are generated by deploying capital into structured, short to medium-term financing opportunities, primarily legal lending, litigation financing, entertainment financing, private credit, and select alternative assets. In each case, capital solves a real timing problem for a business or operator, and investors earn a fixed or anticipated return over a defined period. The platform was founded by Cindy Shen, who has been living on passive income for nearly 10 years, and every strategy featured has been personally tested with her own money through at least one full investment cycle before being shared with the community. For each investment strategy featured, MissPassiveIncome.com tests the strategy using their own money first, and then publishes their real experience, real numbers, and real results, so investors can judge for themselves whether the opportunity fits what they are looking for. Core business model. MissPassiveIncome.com does not manage funds or act as a financial intermediary. Its model is built on three pillars: education, curation, and access. The platform reviews and vets alternative investment companies across litigation financing, private credit, pre-IPO equity, music royalties, collectibles, and more, all personally tested by founder Cindy Shen with her own capital. Once a strategy has passed through at least one full investment cycle and produced results consistent with what operators projected, it is shared with the platform's community alongside the founder's real numbers. Cindy Shen comes from a finance and consulting background. Investors do not send money to MissPassiveIncome.com. Instead, the platform introduces interested investors directly to the asset operators behind each opportunity. Investors conduct their own due diligence, sign contracts directly with operators, and wire capital directly, keeping MissPassiveIncome.com outside the transaction entirely. The founder's stated R&D principles are: test with her own money first, start small, adjust positions based on results, let time filter out the losers, and share the full journey, real numbers, real outcomes with her audience. Step-by-step flow. How returns are generated. Step 1. Education and discovery. An investor discovers a niche asset class through the platform's free content, newsletter, or community. They read the founder's documented experience, including projected returns from the operator and the founder's actual outcomes after investing her own capital. This allows the investor to form a grounded view before committing anything. Step 2. Direct operator introduction. Investors who want to proceed contact MissPassiveIncome.com to request an introduction to the relevant asset operator. The platform facilitates the connection, but does not participate in the transaction itself. Step 3. Due diligence and agreement. The investor conducts independent due diligence, reviewing the operator's background, track record, and contract terms. Agreements are signed directly between the investor and the operator. Step 4. Capital deployment. The investor wires capital directly to the asset operator. Depending on the asset class, the capital is deployed into legal lending arrangements, lawsuit settlements, entertainment bridge financing, private credit facilities, royalty interests, or other structured opportunities. Step 5. Income generation. Returns are generated as the underlying financing arrangement performs through interest payments, settlement proceeds, royalty distributions, or other structured income. The mechanism differs by asset class, but in each case, the investor's capital is solving a defined, time-limited financing need. Step 6. Distribution and exit. Capital and returns are distributed to the investor according to the contract terms, either as periodic payments, for example, prepaid interest, semi-annual distributions, or as a lump sum at the end of the term. The investor then decides whether to redeploy capital into the same or a different opportunity. Revenue streams. Breakdown of income sources. MissPassiveIncome.com covers a broad and growing range of alternative income strategies. Below are the primary asset classes currently featured on the platform, each personally tested by the founder. Legal lending, litigation-adjacent financing. This has been the founder's go-to strategy for nearly a decade. It offers a stated return of 10% plus annually on a 6-month term with prepaid interest, and has consistently performed through both bull and bear markets. Capital is deployed to support legal operations, with interest paid up front. Patent litigation financing. More precisely described as settlement financing, this strategy involves a third party providing capital in exchange for a portion of a settlement or judgment. The stated return is 30% plus annually on a 12-15-month term. Entertainment financing bridge loan for film. Short-term bridge loans, primarily used to secure A-list actor booking fees to lock in filming schedules. The estimated return is 40% plus annually on a 16-18-week term. This is a very short-duration, high-return strategy in a genuinely niche corner of the film industry. Music royalties. Investors can earn passive income from music royalties, including rights tied to songs from well-known artists. The stated return is approximately 7% annually, with perpetual cash flow. Private lending. A broader private credit strategy offering 8.12% plus annually on typical 12-month terms, fully passive. The founder notes the market in this space has evolved significantly and cautions newer investors to read the full series before engaging. Microlending in Africa. A high-yield private credit opportunity offering 30% plus annually on a 12-month term, following the same underlying mechanism as Asian microlending markets, but accessed through a specific operator the founder discovered. Tax lien and tax deed US. An auction-based strategy offering up to 18% plus annually over a 1.3-year term, accessible online with minimal active management required. Pre-IPO equity and private equity opportunities in companies approaching IPO or in early-stage high-growth businesses, with returns tied to equity appreciation rather than structured interest. Collectible strategies involving fine wine, vintage cars, and artworks, typically longer duration investments of 3.7 years, with appreciation-based returns. Return expectations, conservative versus optimistic. It is important to approach return figures on any alternative investment platform as data points for due diligence, not as guarantees. The following ranges reflect what the platform documents, with the understanding that individual outcomes will vary based on operator performance, market conditions, and the investor's own due diligence. Conservative view. Strategies like legal lending, 10% plus annually, and music royalties, approximately 7% annually, represent the more predictable, lower volatility end of the spectrum. These are structured, shorter duration arrangements where the return mechanism is well defined. Moderate view. Private lending, 8.12% plus annually, tax liens, up to 18.1% plus, and patent litigation financing, 30.1% plus annually, sit in the middle range higher potential returns with correspondingly more complexity or duration. Optimistic/higher risk view. Entertainment bridge financing and microlending carry higher stated returns, but also higher execution dependency. These require careful operator evaluation and comfort with shorter, more concentrated positions. The platform's published community data for 2025 indicates that the average passive income earned per person using MissPassiveIncome.com's methods was $17,800. The minimum earned by a single individual was $1,450, and the maximum was $374,600. These figures reflect real reported outcomes across a range of asset classes and investment sizes, and should be understood in that context. Risks involved. Every investment carries risk, and MissPassiveIncome.com is explicit about this. The following are the primary risk categories relevant to the asset classes covered on the platform. Market and macro risk. While several of the platform's featured strategies, particularly legal lending and litigation financing, are described as largely uncorrelated to equity markets, broader economic conditions can still affect operator health, deal flow, and counterparty capacity to repay. No investment is entirely immune to macro shifts. Execution risk. Returns in structured financing depend on operators performing as contracted. Settlement timelines in litigation financing can extend beyond projections. Film productions can face delays. Receivables can be disputed. Investors should understand the specific execution dependencies of each asset class before committing capital. Liquidity risk. Liquidity varies depending on the specific asset class. Certain opportunities, including entertainment bridge loans and legal lending, may involve shorter defined timelines compared with other alternative investments. Investors should still understand the expected investment term and ensure the opportunity aligns with their liquidity needs before committing capital. Operator and counterparty risk. Since investors transact directly with operators, the quality, track record, and reliability of each operator is critical. The platform facilitates introductions and shares the founder's experience, but individual due diligence with each operator is the investor's responsibility. Information asymmetry. Niche asset classes can be difficult to evaluate independently, particularly for investors without background in legal finance, entertainment, or private credit. The platform's educational content is designed to reduce this gap, but it cannot eliminate it entirely. Sustainability analysis. Several factors support the long-term viability of MsPassiveIncome.com's model and the asset classes it covers. Structural demand for niche financing is durable. Legal cases require funding. Film productions require short-term capital. Businesses with timing gaps in their receivables need bridge solutions. These are not cyclical investment fads. They are persistent financing needs that exist regardless of broader market conditions. The founder's model is built to self-correct. By her own account, approximately 90% of the founder's initial tests resulted in losses, which she treats as R&D costs. The strategies shared on the platform are the surviving 5%, those that completed at least one full cycle and produced expected results. This iterative, evidence-based curation process is more rigorous than most content-based investment platforms. Community Scale supports continued access. The platform has grown to over 9,700 newsletter subscribers and 40,000-plus followers across all platforms. This scale helps attract quality operators and increases the diversity of opportunities made available to the community over time. Transparency as a sustainable competitive advantage. The founder's practice of publishing real results, including losses and variance from projections, creates a level of trust that is difficult to replicate and costly to compromise. This is a durable model precisely because it does not rely on exaggeration. Summary. MsPassiveIncome.com generates investor returns by facilitating access to niche, structured financing opportunities where capital solves real timing gaps for businesses and operators. Rather than managing funds or promising outcomes, the platform educates investors, shares the founder's personally tested results, and connects interested parties directly with asset operators. The strategies span legal lending, litigation financing, entertainment bridge loans, private credit, music royalties, tax liens, and select alternative asset classes, each with its own return profile, term, and risk consideration. Returns are earned through structured interest, settlement proceeds, royalty distributions, or equity appreciation, depending on the asset class. Investors retain full control of their capital, conduct their own due diligence, and transact directly. As with all alternative investments, liquidity constraints, operator risk, and personal suitability should be carefully considered, and the platform's free educational content is the right place to begin that process.